Good day, grade 9s. Today, we are going to be looking at posting to the general ledger. So today we'll be completing this activity right here, and I'm going to show you how to complete the trading stock account when you are given this information. Okay, let's start. The information that you are given is from the records of DK Stores. As you can see there, what information are you given? You are given the balances on the 1st of October 2025. You are given the balances for the following accounts: trading stock, debtors control, as well as creditors control. Okay, and the other piece of information that you are given are the total columns in the subsidiary journals on the 31st of October 2025. So you are given the CRJ, the CPJ, DJ, DAJ, CJ, as well as the CAJ. And this activity wants you or requires you to complete the trading stock account. But before we start completing this account, I just want to remind you of something that I always tell learners to do before they start doing a general ledger account. Just know that a general or posting to the general ledger account or completing a general ledger account, you need to complete 3 steps. I call this 3-step process OPC. OPC stands for open your account, okay. P stands for post from the journals, okay. And lastly, close your account. So that's OPC. You open your account, post from the journals, close your account. Okay, so this acronym is very helpful when it comes to completing a general ledger account. So let's start completing the trading stock account. But before we start, let's label our account. Under which group of accounts do we classify trading stock under? We know that trading stock is an asset to the business. Okay, so let's show the effect on the account. Where does the trading stock account increase, or on which side does the trading stock account increase, and on which side does the trading stock account decrease? Okay, we know that as an asset account, the trading stock account will increase on the debit side and it will decrease on the credit side. Very important. Okay, now let's start. OPC says open your account. So we need an opening balance for the trading stock account. Okay, how much was the trading stock that this business had at the beginning of the month? Remember, we are doing the general ledger account for October. Okay, so what is the opening balance for your trading stock account? It's given right here. It's gonna be 144,000. Okay, so we need to record that 144,000 under the trading stock account. But on which side? It should be on the increasing side. Okay, always on the increasing side. Okay, so how do we record or make an entry into the trading stock account? The year is You start with the year 2025. The month is the month of October. And then the day, the 1st. Since it's a balance sheet account, under details we write balance that has been brought down from the previous month. Okay. How much is it? We saw that it is 144,000. Okay. And then you are done opening your account. You have shown that the balance of the stock account was 144,000 at the beginning of the month. Okay, what is the second step? The second step is post or extract information from the journals that only affects the trading stock of this business. Okay, so trading stock, as you know, are goods that we buy for resale so that we make profit on those goods. Okay, so that means for us to have stock, we need to buy stock. Okay, but remember, we are selling this stock. That means our stock account will decrease because we are selling it. Sometimes we are not happy with the stock that was sold to us or that we bought, so we need to return that stock back to the creditor. Sometimes the people or the customers we are selling the stock to don't like the stock, so they return the stock back to us as a business. So we need to show transactions that affect the trading stock account, okay, in the general ledger. But where are we going to get that information? That information comes from the journals. Okay, so let's go to the journals and extract information that only affects the trading stock account so that we can update our trading stock balance. Okay, so let's start with the first two journals. We have the cash receipts journal. So the cash receipts journal is money or cash that we generate either from selling stock, from renting out part of our building, or from commissions, or from any other means. Okay, so this is the cash receipts journal records the money received after performing certain activities. One of the activities is selling stock, cash. Okay, but how do we know the amount of stock that we sold? We look at cost of sales. Always look at cost of sales. And what is cost of sales? And this often confuses learners. Cost of sales is the cost of trading stock sold. Let me write it down for you. What is cost of sales? The cost this is the cost of the trading stock that has been sold by the business. So this is the stock that left the business. So what happened to the trading stock balance, or what happened to the stock that we had? It's gonna decrease the balance of our stock. Okay, yes. And then going back to the journals, and we are looking now at the cash payments journal. Do we have any transaction that affects the trading stock account under the CPJ? Yes, we do. We have this balance right here. So remember that the cash payments journal records transactions whereby the business is buying things, is buying items, is paying for items, or is paying for services. Okay, or transactions whereby cash is moving out of the bank account. Okay, so we know, or we can see actually, that trading stock is there worth 135,800. What does this trading stock amount mean? It means this is the trading stock that the business bought cash. Okay, since it's under the cash payments journal. So we know cash went out, so cash is decreasing. But the trading stock that we paid for is coming in to the business. Remember, we want to get the correct balance of our trading stock. So that means we need to also take into consideration transactions that affect trading stock account. So that means this trading stock is coming in. So there are learners who often confuse money coming out and say, but why are you saying trading stock is coming in but cash is going out? Exactly. Remember, we are working on the double entry principle. There are two things happening at the same time. One, cash is moving out, bank is affected. Two, trading stock is coming in, trading stock account is affected. Okay, so this balance will increase the trading stock account 135,800. That is the trading stock that has been bought by the business. Moving on to the debtors journal. The debtors journal records transactions whereby the business is selling goods or trading stock on credit. So the question is, how do we know how much trading stock was sold by the business? We look at cost of sales. Remember, what is cost of sales? The cost of trading stock that has been sold by the business. Okay, so this one is sold. So when trading stock is sold, the account that we put that trading stock that has been sold is called cost of sales. Okay, so this 51,000 reflects the trading stock that was sold, so the trading stock account will decrease. And then moving on to the debtors allowances journal. The debtors allowances journal records transactions whereby the debtors of the business are returning the stock back to the business, meaning they bought the stock went out, but now they are retaining the stock. That means that stock which they had initially bought is now coming back. Okay, so we also look at cost of sales, meaning we are reversing cost of sales now. The stock that was sold is now back. We are reversing that transaction. Okay, so that means this stock is coming back. The stock that was sold is now coming back. Okay, moving on. Creditors journal. Creditors journal is the same as the CPJ without the P. I often tell my learners that the CJ is the CPJ without the P. Okay, so there's no payment, meaning we are buying items. This is the journal that records transactions whereby the business is buying items on credit. They don't pay for them immediately. Okay, so we can also buy stock on credit. Okay, as you can see, there is an amount for trading stock that was bought on credit. We are buying here. That means 80,000 increases our trading stock account. Okay, and then moving on to creditors allowances journal. A creditors allowances journal records transactions whereby the business is returning back the stock or any other items back to the creditor. Okay, meaning we probably the business was not satisfied with the stock, or maybe the creditor delivered the wrong color of the stock, so we have to return it back. Okay, so this is the amount of stock that we returned back to our creditors. So the stock went out. The stock comes in, as you can see, under the creditors journal, but the stock also goes out when we return it back to the creditor under the creditors allowances journal. Okay, now let's record or put that information under the trading stock account. Now we are posting. Okay, but let's start with the transactions that only increase the trading stock account. Let's start with those transactions. Remember, when you are posting, we are posting from the totals at the end of the month. Okay, so let's start with the first one that increases the trading stock account. Remember, we have cash. We have a transaction under the cash payments journal, 135,800. So this is the stock that was bought. Let us record it. So it's going to be bank, because we bought this stock cash. So the contra account for buying things cash is always bank. And from which journal are we extracting this information from? The CPJ. How much stock did we buy? 135,800. Okay, so we are done with that one. Let's go to the second one. The second one is the debtors allowances. It's the balance of the stock that was returned that is shown in the debtors allowances journal. This one. Okay, so we are going to say, okay, the date is still the same, so you don't have to repeat it because we are posting on the same day. Okay, so what are we going to write? We are going to write cost of sales. We are reversing cost of sales. Okay, that is the details. And then from which journal? DAJ. How much? 5,500. Okay, and then there is another one, another transaction that increases the trading stock account, and that is the stock that was bought on credit. Okay, so if something is bought on credit, the contra account is always creditors control, to show that the stock was bought on credit. So here, let me just put this here under bank or next to bank is cash. The stock was bought cash, and here the stock was bought on credit. Okay, so the business has two options: to buy stock cash or to buy stock on credit. Okay, so let's continue. We extracted this information from the CJ, the creditors journal. How much is the stock that was bought? 80,000. Cool. So we are done with the transactions that increases the trading stock account. Okay, now let's go to the transactions that decreased or decreases the trading stock account. The first one is the one under there. The CRJ, the stock that was sold. So it's cost of sales. So since we are starting all over again on the other side, so we are going to start with the year 2025 October, but we are posting at the end of the month balances for balances on the end at balances at the end of the month. So it's going to be cost of sales because we are selling again. So every time when you are selling stock, cost of sales is the contra account. Okay, so from which journal are we extracting this information? CRJ. This is the amount of stock or the cost of the stock that was sold. It's 241,400. Okay, we are done with that one. Let's move on to the next one that decreases the trading stock account. It's from the DJ, the stock that was sold on credit. Okay, so it's still cost of sales. I'm going to write it there. From which journal? The DJ. How much? 51,000. Okay, yes, and then the other transaction that decreases the trading stock account is the stock that we sent back to the creditors. Okay, so we get it under the creditors allowances journal. So what are we going to write here? We're going to write creditors control. We are reversing the creditors control. When we buy, creditors control will increase, but when we return, creditors control will decrease. Okay, so it's CAJ. How much is the stock that was returned back to the creditor? It's 15,500. And then I think we have ticked all the journals. So every transaction that affects trading stock is under the trading stock account. Okay, so we are done with the posting. Now let's close. How do we close? Total both sides of your account. So when you add your debit side, you will get the total of 159,000. No, you won't get that amount. That is the closing balance. You will get the total of 466,900, and then on the credit side you will get a total of 307,900. Now we need to balance. We need to make sure that these totals are the same. Okay, both sides need to be equal. Okay, the debit side needs to be equal to the credit side, but they are not equal. As you can see, the debit side is bigger than the credit side. So the rule is you always take the total of the bigger side. Okay, the total of the bigger side. Okay, every side should match to the bigger side, which is the debit side. So the debit side is bigger. So when you add everything on the debit side, it will give you 466,900. But when you add balances from the credit side, they won't give you 466,900. Sorry, should be 900 here. Should be 900. Okay, so how can we make the credit side to be the same as the total of 166,900? You simply minus the smaller side from the bigger side, and then you should get 159,900. This 159,100 is the closing balance of your stock. Basically, is the difference between the stock that you have and the stock that you no longer have. That's the difference. Okay, so we call this the remaining balance, which is the balance carried down at the end of the month. Okay, So you are not done. You also need to show the opening balance for the next month, which is the same as the closing balance for the current month. So it's going to be balance brought down, okay, on the 1st of which month? November. The year is still the same, but you can write it as well. It's 2025. And then you are done. Thank you.